Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, June 7th. Hope you guys had a good weekend. Ready to dive back into it here this morning. Let's take a look at the futures. Equities are down about 0.25% across the board. Copper's down 1%. I think oil was down about 0.5%. Gold is down 0.25%. Nothing much happening this morning really on the equity front. On the macro front, we got a pretty quiet week ahead. Nothing really happening today. We're entering the FOMC blackout period. Their meeting is, I believe, next week, the 15th and the 16th. So we won't have any Fed speakers this week. And on Thursday is probably the biggest data release. That's the CPI. Remember, that was the one that drove everybody crazy a month ago with the hot inflation numbers. I think it might be a little bit different this time just because, I don't think it'll be a shock the second time. The first time was a shock, but now I think people have recalibrated to that, and I wouldn't expect, a hot number to catch anybody off guard. They're probably anticipating that, as a matter of fact. So we'll have to wait and see for that. But let's dive in. Just recapping, on Friday, we had the May jobs report. Came in at more or less a Goldilocks number, 566. And I think the sentiment out there was such that, it didn't come in really hot. So hopefully that'll keep the Fed at bay from their tightening talk, and it didn't come in real poor either. So kind of like right in the middle, and the equity markets really responded with a more or less a gap and go. So here on the SPY 2 hour, here was the gap Friday morning, and then just right on up through the end of the day, right up to the prior highs. Now today, I think the thing to do is just key off of this gap. For instance, we're red this morning. If we were to pull back to the top of this gap at 420.75, I think that would be a decent place to initiate a long against that gap with a stop just below. We may only come back here a little bit to 421.50-ish right here. You may want to take a shot there, but I really think a back test of the gap would be, super prime location to try a long. If things reverse right out of the gate and price breaks to new highs, I think you buy it on that breakout, and then you calibrate your stop just below 422, something like that, depending on how tight you want to play it. But once this breaks out, if I'm not mistaken, I think that'll be an all-time high for SPY. And so you got to buy an all-time high, at least in my book. Here it is on the 30-minute chart. You can see the grind higher. Not a lot of information to add here, just some granularity on the levels. I've got a level here, 421.50. And then, of course, here is the gap, and then here is the prior high, 422.75-ish, right in there. So those are the key levels on SPY. Qs, still keep in mind the chart looks totally different than SPY. On SPY, we're challenging the highs. Still got a lot of work to do in the Qs. We did have the gap and go with an impulse higher. I think today you key off of 334.50 right here. If you get a pullback into there, I think you can try a long and then look for 337, 339.50. I wouldn't want to see price drop below that level. Why? Because it's back in this trading range where there was all this congestion. And if you lost 334.50 it would be my expectation that price would come back down to the bottom of the box and most likely even tag the top of this gap here at 331.78. So for today, if price were to, let's look at it on the 30-minute chart. Got this resistance here at 336. If it pops that, buy it and look for 337 or higher. But if you lose 334, I think you could take a tactical short there, try to play for $2 and a move back down to the top of the gap. At that point, I would probably cover that short, take any profits that you had there, and then either go long, anticipating a bounce, or wait to see if price moves into the gap. I think the only way that happens on a first tag is if there's a lot of selling momentum and you're seeing, a lot of red across the board in SPY and IWM. So my base case, if it went, if you did lose this level, that it would bounce here at the top of this gap. I think that's a good rule of thumb to follow. Your first run at a gap usually holds and you get a pretty good bounce. It's the second try that has a lot more probability of getting into the gap. IWM. The way I've got this set up is keying off of 225.50. I think that's the major pivot on IWM because below 225.50 is this big trading range where we had all that congestion for all those weeks. And now we've broken above. So to make a long story short, I think you can stay long against 225.50. If we were to break higher out of the gate, if you weren't in, I think you can get long above 227.75. Look for this gap fill, then look for the low 229s and then the 231s up that way. And if you lost 225.50, then you're on the wrong side of the price is on the wrong side of the chart. And I think you can take a short there and then see if you can get a gap fill of this gap here, 224 to 223, and then on down. But I think 225.50 should work really well as a main pivot that runs through these charts. And here you can see some granular information on the levels. There's a lot of little intermediate levels here. You've got a little gap, then you've got some overhead resistance, etc. And same thing on the downside. So there's a lot of little places where price can bounce and fail and all that kind of stuff. It's not as clean as some of those other charts, but I think these are the levels. It'll just be up to you as far as executing around those levels, as we always talk about. Just staying objective with your longs or shorts against these predefined levels, and I think if you do that and you respect your stop, you'll be fine. So take it that way. Facebook, nice move off of this 324 right up to the prior high, pulled back to 330. I think today, well, first of all, on Facebook, I would be looking for long setups. It's been one of the stronger FATMAAN names, and even on bad days, it's been kind of outperforming. So depending on how we go today, like if we were to open below 330 and then recapture it, I would be a buyer right there at 330. and then look for 332. If we, open between 330 and 332, I would buy either a back touch at 330 with a stop below, or buy the breakout above 332. If you get the breakout, you're at new highs, no natural sellers. I like that trade. And I think that's a trade where you can go a little bit farther out in time if you're constructive on the market. I mean, it doesn't have to be, a day trade. You could get something, get some calls for the end of the week, and then see if this can't grind higher, up towards the upper 230s. That would be a nice trade in and of itself as well. So I like Facebook here, as long as it holds 330. If you lose 330, can come all the way back to 326 and even 324. But even there, if there was somehow a move back to 324 to back test this low, I still think that's an objective long right there, rather than getting too bearish on Facebook. It's been too resilient, and I think the long side should be favored on that particular name. Okay, Apple had a good day on Friday. It was up 2%. Still got a lot of work to do as far as overhead resistance goes. Got a couple of big volume over price bars right here at 126.50. We've got a confluence of 20 and 50 EMAs on the daily at 128. I think you can get long on a breakout above 126.50 and look for 128. But in my mind, I would view that as an intraday, quick hit and run trade, getting up to 128. But if price can get through 128, I'd be a motivated buyer on a longer time frame, knowing that you had these big moving averages below you if price were to take that out. So if you wanted to, if price broke out here above 128, I would go out in time, and not be, deathly afraid of an overnight hold. I'd be more apt to see how far this could run. If it broke out from 128, I like that one. Tesla had a nice day on Friday. You remember on Thursday, this bar was the news out of China that their sales numbers were bad. Came right down here to the top of this gap. And then on Friday, recovered all of that loss and recovered 595. So we're right back where we started, actually. On a break above 595, I think you can stay long. Look for 610. Look for 625. Look for 640. But 595 has to hold. That's your key level. And if it can do that, that makes this look like it was just a one-day head fake. And so, I would be long Tesla against 595. Microsoft, good day. Gap and go. I think it's pretty clear here, after all this congestion a few weeks ago, that if price can pop this 150, 175, 152 area, you can look for 253. And then you've got a gap, a big gap that starts at 256. So on a move above 252, I'd be a buyer there, and then look for 253 and then 256. On the downside, I wouldn't want to see price drop below 250. If that were to happen, then I think you'd be coming back in here to the 248s and possibly all the way back to test this gap at 247.51. So mark those levels on your chart if you're going to be actively trading. Microsoft. Amazon hasn't been doing much lately. I think, 3,200 is your pivot. It's been sitting here for multiple days. You've got a gap above and you've got a gap below. Remember, we've got this EMA confluence at 3250, 3260, right in here. So I think as long as it's below 3250, I think you have to stay really, really tactical. Okay, be long. See if you can get the free 50 club, right? See if you can get a $50 move up to 3250 as long as price stays above 3,200. But I mean, to really anchor something, out in time to get long, I think you got to get above 3,250. So below that level, I would stay very tactical, more or less day trading mode while it's below that level. But the moment that it breaks above, I would go farther out in time and not be, deathly scared of an overnight hold, because once these moving averages are below, they should act as good support. So that's what I think on Amazon. 3,200 is your pivot. Google, gap and go, then a little bull flag. Anything above 2,400, buy it and look for 2,430. Anything below 2,390 is back in this trading range, and I would expect price to come back to the top of this gap at 2,365. So it's got to hold this flag. I assume if the market is, anywhere halfway strong, Google has been a strong name, and I would be leaning bullish for sure on Google, and have an alarm there at 2,400 for a breakout, and I would even alarm 2,390, because if it pulls back to 2,390 and holds, that would also be a nice entry point, and then you can put your stop just below, and then, if price fails, you're out. But I think that's a higher probability setup than trying to, wait for a breakdown and trying to catch this breakdown here from 2,390. So, if you're looking for a long and it doesn't work and you get stopped below 2,390, then you can reorient to short if you want to, and see if you get a move back down to 2,360. Netflix keeps wrestling with this 500. We broke down. We didn't get to the bottom of the box like I had anticipated. It reversed right here, came up to 500, but then was rejected. So there's a lot of noise in Netflix lately. I think you key off of 292.50 and 500. Below 492.50, I think you can be short and look for a move back down to 485. But if it recovers 500, I guess you can be long again and look for 507.50 and then 515 on the way back up if Netflix can get its legs under itself. It really hasn't been a lot of prime trading ops. I mean, it's moving $5-10 here or there. That's not a lot on a $500 stock. So if you've been trading that, I can see how you could have been, or are frustrated in the trade because there hasn't been a lot of activity here in the last month or so. Semiconductors, big day, Friday, gap and go. Up here, finish near the top of the range. If you get a breakout above 253, buy it you probably get a run up towards 258, which I think was the prior high up in that area. If it waffles, you probably get a move back down in here to 249, 248.33, the top of the gap. And I would be a buyer back here on a back touch with a stop just below, and then look for a bounce back up to 253. Leaning to the long side on semis just because of the price action. We broke out, we had a big move down to 224. We broke out. Then here was the secondary breakout above 242.50, and we've been above that level the whole time. So I think there's some underlying strength in semis. So I'd be looking for long ideas instead of short ideas. And like I said, if you got to pull back into 248.50, or even if this gap were to fill, I would be trying to buy something rather than trying to short something on the semis. That would change if 242.50 were to fail. If we get back down into this area again, then I'd be leaning to the short side on that. If you're new here and you like the analysis, having all these levels laid out for you, hit the subscribe button and the alarm bell. You get all the information every time I publish. I think if you use my levels, I think you can trust them. And if you work on your execution, I think you'll become a better trader. And just taking some of the technicals off the table will free up your mind to focus strictly on your execution. So check over in the show notes. There's also links to the blog site and to register for all my content. That'd be great to have you join our team. We've got a trading room. You'll get an invite to that. We'd love to have you. And of course, longtime viewers, hope you're doing well in your trades. Please share the link with others in your trading circle. Reposts on Twitter and Facebook are always appreciated. I would appreciate if you do that for me. So let's move on to some commodities. Copper's been in this little corrective phase, and we saw in futures are down 1%. It's got to hold this main trend line that comes in about 430. We're about 450 now, and down 1% on futures. So I think if it loses 440, probably come into this trend line, and then that will be a major level. So, watch copper, and that would be for your Southern Copper, SCCO, for Tech Resources, TECK, and of course Freeport, FCX. Those are good copper trading proxies. So watch copper this week. Coffee continues to grind higher. I've got you remember I was in some long calls on the ETF, JO, coffee, and I rolled those higher. So I'm in June calls for coffee on JO, and you can see that coffee is grinding higher. If we were to get a push up here, I'm going to roll that coffee position out and get out into July or even September on those. But it continues to work, just grinding higher, holding the 8 and 20 day and holding this channel. So I think that looks good. Oil has broken out from the 66 level, and we'll get another test up around 70, 71. I'm still bullish oil. If it were to pull back to 66, I think you can be a buyer there. But anything below 66, that'll make this look like a big head fake. So let's keep our eyes peeled on oil. And remember, it is 50% of the whole commodity space. So it's really, really important. And also from a political perspective, oil takes off here, and gets into the 75s and 80s. We're all going to be looking at $4 gas again, and that's going to really stir up the natives across the country when you start getting hit with those kind of prices. So it'll be interesting to see, what, if anything, happens when and if price makes that big move. Let's wrap it up here with wood. I don't have the lumber chart here, but suffice it to say, lumber was on that parabolic run. I think it went from 300 to 1700 in 6 months, and now it's on the backside of that parabolic move. You can kind of see here where price has, it peaked out at 100 and now is back below 91, let's call it. Below this large volume over price support bar, below that lateral support, and below the fast moving averages, the 8, the 20, and the 50. So wood has gone from a parabolic bull to now a bearish posture. This may be an interesting short, just from the standpoint that price is below all the things you would want it to be below for a short setup, below all the moving averages and below key support. You're really close right here. You could set, a stop just above, and then I think at that point you'd be playing for a move to 94 and possibly even down to 84. Playing for a move to 84 and possibly even a move back to 80 after the parabolic run. I think that would be a reasonable pullback in wood. So that's a trade idea for you. Now, this morning on the blog site, I've got 4 or 5 chart setups for you on trade ideas. I've got a couple short ideas. I've got I think 3 bracket trade ideas and a couple of breakout ideas for you. So if you're lacking for ideas, go check out the blog site this morning. I've got the charts posted, and set your alarms and then wait for the trigger. So just to recap, big day on Friday. Let's see if price can follow through, break out the all-time highs on SPY, see if the Qs remain stable and grinding higher. Same thing with IWM, and we'll see where the week takes us. Okay, thank you again for your time. I hope you found the information beneficial. This has been Chris Buss with Traders Profit Compass. Talk to you next time.